Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, Treasuries are already on the sell. Got some central bank speakers coming in today, so we'll see where this goes. It should be interesting. Let's just come in and check the charts real quick. I don't think too much has happened overnight, but where are we? There we are. Okay, so here you can see a little bit of overnight movement to the upside, and we're just retracing that at the moment. So we're back to what? 4.07. S&P, man, all over the place. So like yesterday, or sorry, Friday, it was quite a battle. Like for most of our time, it was kind of like didn't do much of anything. After I left, there was a pretty strong rally, but that rally all sold off before the close, and then a little bit lower overnight. So the equity market finally starting to perhaps show some weakness. Then we've got gold and silver getting hammered here by these higher rates this morning, as well as copper not doing so hot. And then we go over to the Bitcoins. The Bitcoins also struggling here. They have not reached 30,000, but they have been toying with it, and the dollar is a little bit lower, actually. So mind you, the dollar has been strengthening through these periods. To see the dollar a little bit lower is concerning to me. Well, maybe let's not say concerning, but that kind of like sticks out to me like, okay, that's different. So, what do we do here? Do we just straight up go short? Well, if I was on time, I could probably be short and be safe. Thing is I think that we probably will just have net selling today, but we've already sold 10,000. So, we should make sure we got financial juice running here. I always forget that. Okay, so we don't get, so we do have some Fed speakers. We got Bailey and Barr are both speaking at 10 o'clock. So that's, 90 minutes from now. Got plenty of time till that one. What else we got going on? Something is like I've seen so much social media stuff lately about threads and like Twitter's going down and everything. But then I come to Twitter and it's just like it always was. Nothing's changed. Oh, look, there's Andrew Tate tweeted something. Nothing gibberish. I have no clue what they're talking about over there. Oh, and messages. Guys, if you're going to send me a message on Discord, because my private messages are always open, but I'm not going to small talk with you. Like, if you come in and you say, hey, and you're waiting for my response, like, it's just going to go like that forever. Just start out with the question or why you're messaging me. How's the trading been? So it's been going pretty good. It was not good on Friday. But the damage was contained. So, but this period where the rates have just been going up and up and up and up, has been very advantageous to us, But that's where I'm still a little bit like, because one of the things would be like, oh, well, if you're doing so well, why don't we like size up crazy or like start a fund or something like that? Well, I do want to size up soon, but I don't think that I want to do it during the summer is one thing. Plus, there's also, I still have, like Friday, I don't like those. I would prefer to limit the damage on those ones. I don't know, maybe a day like Friday is going to happen every once in a while, so. But, that still makes me a little bit nervous about sizing too much up. But then the other side of it is still that we're primarily making money when these treasuries get volatile. And it's just kind of been like a favorable period for us, right? Like if the treasury market goes back into a market like it was in 2017, then I don't know if we'll do so well. So, but yeah, recently we have been doing pretty well. I also, in terms of like doing a fund, gotta remember that day trading is not intended to like beat the market or any of those things, right? Day trading is intended to get consistent income, right? Because the thing that's most correlated with returns is time in the market. And in day trading, you're minimizing your time in the market. So it's kind of silly to expect that you would outperform the market unless you're doing extremely risky things. But you're not going to consistently outperform the market from doing that. Like, do those extremely risky things and out-earn the market 5-10 years in a row. You're not going to find very many people that can do that. Well, so so it wouldn't be appropriate for a fund, right? It might be appropriate if you already have a really big wad to trade and you want to trade for a living. You want the income, right? But you're talking closer to the risk-free rate of return. You're talking, like 5%. You could make 5%. Easy. Probably more than that. But I don't know if you would outperform the market every year. But I digress. So if I want to run a fund, then the thing is we would want to we would need more long-term strategies. So I'm kind of doing some research on that. So I've actually, I have all of this ES data now. So I'll kind of want to dive back into some backtesting with it. I told you guys I was going to put a video out today. I didn't finish it. I got all this stuff. I got, I did the rough cut and I was putting the B footage in. But like when I got to the backtesting part, I was like, I kind of want to try a couple of things because I want to make sure that when I put the video out and people try it themselves, that I don't get flooded with messages from people trying to figure out how it works and stuff like that. So I want to test a couple of alternative strategies here this week and maybe give it to one of you guys. See if anybody else has any trouble running it before I put the video out. So, man, I am not. It is like the house is warmer today or something. I don't know what the. What type of edge do you think there is in smaller cap stocks? Oh boy. Well, so first of all, there's always an edge if you know something, right? Could not even sleep with this heat. I mean, in Utah, pretty much everybody has air conditioning, but I don't know why it feels so hot to me today. It might just be me. I don't think that the house is any different today. Let's check the thermostat. Well, it says 71. It is more humid today for some reason. That's kind of odd for Utah. But I guess it's an El Nino year, so. Well, the treasuries since I've been here pretty stuck in the mud. It really feels like they came in and they're like, "Quick, Seth's not here yet. Just sell them as hard as you can before he gets here." You think I can get an edge if I become a Fed banker and absolutely. You know, is something that kind of frustrates me is that the big institutions, and I'm talking about your Goldman Sachs, J.P. Morgan, Citadel, et cetera, right? You know, they have so many people that want to work for them that they can pretty much pick whoever they want, and they almost always go for people that they can pull right out of school, train them from the very beginning so that they don't pick up any bad habits. And then you can pick, you know, some of the smartest people, like people that went to Ivy League schools and things like that. But, you know, trading is kind of an interesting thing. And one of the problems is that a lot of people just don't have the knowledge or skills necessary to do the kind of trading that they do at the banks, right? A lot of those people are master's students, right? So what happens is you'll go to a school and then you'll get a master's, and one of the things that you'll have done in your master's is like optimal execution, for instance, and then you get hired by the banks, right? Not very many retail traders that know anything about that, but we've been teaching about that on our channel, and I really think that there's a lot of you guys that are here every day that if you were put on a desk could outperform the people that they're hiring from the Ivy League schools. I really do. I think there's a number of you guys that are super smart and clever and understand this stuff really well. And you've got the experience, but I don't think that the banks would ever look for you, you know? So absolutely, if you were, and I think you absolutely fit that bill, Walter. If you got put on a desk, I think that you could excel. What do you think about NB? Never heard of it. Don't really. I only pay attention to a small number of stocks, the ones that I have, right? But you know, the question earlier was like, what kind of edges there in smaller cap stocks, right? So I have rare earth resources, REEMF, and why am I in that one? Well, because I know that there's a problem with rare earths, and that mine is like practically the only way in the United States that they can get access to these rare earth minerals. So of course, eventually it was going to pop off, and it did last week, right? So there's an edge in there. There can also be an edge if you have the level 2 for it. You know, some of those instruments are really inefficient. And so especially if you have an effective way of like valuing these stocks, you could certainly scalp and pull some out. Is hedging allowed? Well, what do you mean by is it allowed? So do you think that like if you own the S&P 500 and you're afraid it's going to go down, so you come over to the futures and sell it, that they're going to be like, oh nope, you own the S&P, you can't do that. That seems silly. So I don't think that must be what you mean. So what do you mean by is it allowed? Like, what is the specific scenario that you're looking to do? Man, they went down there for new lows. I thought that they were gonna sit here for a little bit longer. It's just one of those days. Okay, if I buy something and sell something at the same time, so so if I came into the Treasury, for instance, and I bought it and then sold it at the same time, then my position would just be flat. Like I could buy 15 half and sell 15 and just lose a tick, right? I would lose a tick. But so when we're talking about hedging, it has to be between two similar but different instruments, right? For instance, I could buy the 10-year and sell the 5-year. And now I'm hedged. At least I'm hedged against the outright direction of the treasuries, and I'm only exposed to the change in the curve, the change in the interest rate curve, yield curve. That's what we call it, right? So that's an interesting thing to realize about hedging is that hedging doesn't eliminate all risks. Hedging allows you to be much more specific about which risks you want to be exposed to. Can you explain DOM trading? Sure. Well, so I have a video series. So if you're new to DOM trading, I would highly recommend watching that. But just real briefly to explain what you see here on the DOM. Okay, each one of these, this is the S&P 500 DOM right here. Okay, this is the price. This blue column are bids, and the orange-red column is offers. Okay, and then the two columns in between are the buys and sells hitting into those bids and offers. So like, you know, they're buying at 44.31. You can see 224 have bought and 30.23 have sold. Now this one is a little bit weird because I have tick aggregation on. Probably would be better to look at, like, say, the 10-year over here, right? 1201 has sold into 14.5. Okay, cool. So now you understand what you're actually looking at. How do you use it is kind of the real question, right? And what I'm watching for, and you got to realize that this is kind of something that is a really complex process, and you kind of have to come in and watch it every day, and your brain will slowly learn to see and interpret what it's seeing. But what I am interested in particular is what we would call latent liquidity. Okay, so the orders that I see right now on the DOM, that is the resting liquidity. Okay, but most market participants will not just put their liquidity out there for everybody to see, right? There's reasons for them to hide it. And so there is a lot of liquidity that will show up when it gets to a certain price or when things start happening, right? So that's why this middle column here, it shows the market orders hitting into the bids and offers. And then if it like ticks down and then ticks back up and it's been more than like 2.5 seconds, then it will reset. The number of market orders will reset back to 0. And so that tells me basically how each time that it ticks, how many did it take, right? That time it took 983 and they offered 900. Okay. So that gives me an idea of what the liquidity is looking like and what the market orders are looking like. And we're looking for a situation where there's an imbalance, where we know that there's going to be an imbalance. Today would have been a good situation if we had been earlier today. Probably pretty good chance because we have some Federal Reserve speakers and because there's a lot of quantitative tightening coming from the Federal Reserve, those sorts of things. Treasuries are likely to sell. And so then I can come in and I can look and I can see, are they actually selling? So when we came up here, you can see last time that we did, were they selling? Yeah. The bids were actually putting up a decent fight. They were putting up almost 10,000 contracts here at 1021 and 1020 half, right? And they just plowed right through it like butter, right? So clearly those market orders to sell through that liquidity were there, right? When I'm seeing like, normally you see an iceberg like that, it's like, they're going to shy away from it. They can't get through it, right? But if I can see that the market orders are there and they're pushing through it, then that's, a good chance that they could just keep going, right? And so what I see on the DOM, and there's kind of all these setups that I talk about in the video series, those are all kind of like tea leaves of like judging what is going on in the market. And then you combine that with what you know from a more informational perspective, like the context today that treasuries are likely to sell because quantitative tightening and Federal Reserve speakers later today, they've been hawkish, et cetera, right? I can kind of combine those together to try and find an optimal entry, right? Now, the other side of this is that the market will tend to dig out the liquidity and create a hole sometimes. So it was kind of doing that at 17.5. It's maybe kind of doing that at 15.5. But basically what happens is the latent liquidity gets exhausted. And there's not really anybody willing to put bids or offers in that location. And when that happens, it's really hard for the market orders to overcome, essentially. It'll just like tick up and down in that tiny range and go sideways, right? So when that's happening, that situation can last for about 45 minutes. I want to avoid that, right? So I want to, get in early, or if we're having a move like this and I think there's going to be another leg, then I can wait 45 minutes. So like in this situation, probably we wait until 9:15, maybe the S&P 500 start. And if there's going to be another leg in the treasuries, maybe then we'll get that other leg, right? And so that's kind of a really, really general overview of how I use that information to inform my trades and get a better location and better timing. Now I understand why the market orders get, yeah. Because right now in the ES, it's kind of funny, Jan Peter, because it used to be that there would be 300 to 500 lots per price in the S&P, back when we were like in the 1000s, And now, if you take out the tick aggregation, they can barely get over 50. So the main reason why I don't show the tick by tick in ES is, number one, it's not my primary instrument. And it moves so much. It's just when you aggregate the ticks together, it's a lot easier for me looking from a really high level perspective to figure out what it's doing. In other words, I can read the S&P 500 in almost the same way that I read the 10-year treasury. Because I tell you what, the 10-year treasury is a lot easier to read from an order flow perspective than any of the other instruments, right? If you're just learning order flow, I would really strongly suggest that you start out learning in the 10-year. I understand why a lot of people don't want to trade the 10-year. It's a very difficult, it's a very efficient instrument. It can be really slow. It's not as exciting, but as a learner, all of those things are good. Teaches you patience, and it's so much easier to read the order flow, and it doesn't do freak things. Like over here in the S&P 500, you just see freak moves that go up and down and all around, and there's like no explanation to it, Whereas in the treasuries, if it's moving, if it's trending, there's usually a pretty good explanation. And while you might not be able to explain the flow at the time, usually by the end of the day or the end of the week, you can figure out what it was that was driving that action, right? And so you don't get like the S&P 500 can kind of trick you. It can be like, well, I saw this move and I made money on it, and that makes me think that I saw something, and so you start trading that thing, and it might even play along for a little while, and then all of a sudden one day it just absolutely destroys you, right? Oil in particular is really, really bad at this. Oil will make you think that you're a genius and then just crush you. Whereas the treasury, it just crushes you from the very beginning, right? It doesn't give you very much of that fakery. And so you learn real fast from trading the treasury. Where am I primary? So I place most of my orders over here in the micro 10-year. I'm still I'm trying to keep things real small. I've done so much better keeping it small. In these micros, it's only $1 per tick, right? I've been doing pretty well with them. And it's a good I think, kind of proof for, because I think most of the people that come to my stream tend to be, well, there's like this really dedicated core of people that have been here for like since the beginning for like 5 years. But most of you guys, you're going to come in, you're new to order flow, you want to learn about it, right? So you're brand new. And so me doing it here in the Treasuries is, I think, really useful to you guys, right? Show you like, oh yeah, it can be done. Here's how you do it. Kind of be the sniper, and you just got to know which direction it's going to go. So yeah, I like doing it. I like coming over here. We do need to size up a little bit, but maybe after the summer. Yeah, there you go. See, but what most people will do though, because I tell you what, this can take a lot of focus. I always know when chat goes quiet, it's usually because everybody's in a trade. Like there was a move and like everybody's really focused on trying to figure out where it's going or what it's doing, right? It can be hard when you are listening to a stream or a person talk. You're kind of in a way giving that person permission to think for you, because you're not hearing your internal monologue so much as you are what they're saying, right? So a lot of people, once they feel like they have it figured out, do prefer to just go it on their own and not speak, unless you really, really enjoy me, which is the core people, right? So, yeah. So I understand most of the people that will, well, not most, I don't even know what percentage it would be, but a pretty substantial portion of the people that come into chat are brand new, and that they won't listen forever. Like, hopefully you get to the point where you feel like you understand the concepts that we're talking about and you go off on your own. Now, we do, because we're talking about things that could be moving the markets, like the economics and stuff like that, it is useful to stick around because we work together, but that's not going to be for everybody. Yeah, never use the DOM or the footprint. I don't look at the footprint very much anymore, but every once in a while, there will be a move in the S&P 500 overnight that I'm like, wait a second, what happened over there? And then I'll pull up the footprint. But I guess there's a lot of footprint setups that people have that I'm really not impressed with them. Do you not really? So I use the volume profile, but I don't use these setups that people. So the video that I was going to put out today was talking about these. Okay, if we open up above the previous day's value area high, and then we start falling below it, then we're likely to trade back to the previous day's point of control, sort of a setup. That's what I was backtesting, and they don't work very well. It's kind of funny looking at the backtesting of it, because there was a period where it did well, and that was when I remember a lot of people talking about it, and it was really popular. And when I came along into the market and kind of started paying attention to it, didn't do very well at all. So maybe that's why I never really picked up on it, was because the time period when I started trading was like when volume profile did the worst, right? But overall, when you look at a 10-year history, it's not a very effective setup. So I use it very differently, right? To me, the volume profile is just a record of the past liquidity conditions. And in particular, if I see an area like the point of control at 16.5, that's probably an area where we ran into a liquidity hole. So the main reason why there's so much volume there is just because price was stuck there for so long, right? That tells me something. I mean, if it's been a long time, if it's been like an hour or two, we come back to that spot, it doesn't necessarily matter so much. But there's a chance right now, for instance, that we get sucked back to the 16.5 and just fall back into it again, right? So that's kind of how I look at the volume profile, because there is going to be these distributions, right? That is not what you would expect in a random walk. And the reason is because the liquidity causes that. It's because those liquidity holes. But I don't care about like where was the point of control on a previous day. Unfinished auctions, that's another one that I've backtested in the past. I don't think I have the backtest code for that one anymore, but early on I backtested that one and it didn't work. I guess you could say more broadly that your traditional kind of setup, which is like you watch the market for some sort of statistical aberration that you believe occurs, and when those set of technical conditions are met, you enter a trade with a certain risk reward. I avoid any kind of trade like that. So anything that's based on like those specific technical setups tend to get arbitraged out of the market really easily. So I avoid them specifically. I want to use my informational edge and try and find a situation where I know something that's not really being properly factored into the market, that there's going to be a certain flow and people aren't expecting it or whatever, right? Oh, really, Lafta? For many years, I was primarily ES trader. Thanks to Seth's persistence in the bond markets, I folded and now exclusive to ZN and micro yield. Well, remember that there was a period there for 2 or 3 years where I was trading ES because of the micro yield futures. I was like, oh yeah, those seem really cool. But then when the micro treasury yield futures came along, I switched back over to that, and I've been done much better since then. Can you explain to me why the ES changed when the buyers really not really hit into the offer on the bottom? Okay, so I think you're saying, okay, over here, in order for me to tick down, it took like 1,000 contracts. And then I get up here and like it's able to tick up on only like 50 contracts. What's with that? Right? Well, so what that means more generally, again, for it to tick up, right, the market orders, market buys have to overwhelm the limit sells. And the way that we generally, like the framework that I would encourage you to think of it as like the standard situation is that the market buyers, the informed traders, just come along and buy all of the contracts that are on offer, right? If that's not what's happening, right? If the limit orders are pulling in front of that, okay, what does that mean? Well, most of the time when orders are pulling, it has to do with a correlated instrument. That's the first thing you should always remember, okay? Most of these robots that are just trying to market make and trade this spread are very much relying on correlations between instruments to determine where to put their bids and offers. And so if all of a sudden they're pulling their offers, that could mean that there's a correlated instrument that is moving and they're just pulling their offers because of that, right? Now in the S&P 500, it gets a little bit more complicated than that, right? Because it's an index. So there can be a situation where all of the stocks are moving up and the futures aren't really that interested in trading it. And so it just ticks up without a whole lot of contracts trading, right? Because of only 317 buy markets, but more to sell markets on the side near to it. Okay, well, so this is where again it's like it's always easier to watch the Treasury. So you will almost always see a situation like this where here's your bid and here's your offer, and well, right now they're really close. Okay, so it's 16.19 and the offer is 9.11. So the offer is half of the bid, right? The most likely thing to happen next is for them to tick up and only bid like 500 and then they sell back down. Okay, so 800 bid, a little bit more than I expected, but right. So now the most likely thing to happen now is for them to sell back down and, sell 800 contracts or whatever, or maybe those contracts pull and they tick back down, right? And that's like when nothing's going on in the market, or we're in a liquidity hole. That's what you can see, right? It's going to tick towards the way where there's the less liquidity, right? That's why, like, if for instance we ticked up at 20 and there was immediately 2,000 contracts on the bid, that would be like okay, hold up. That was like a big change, right? That was not the standard way that it trades. That it bid very strongly. Okay, so see there, it ticked back down, and now it's kind of going back and forth, right? Right? Okay, so in summary so far, whichever side is weaker, it's more likely to tick in that direction. We have the offer is weak, they're more likely to tick up, right? And so part of what I'm doing is I'm watching the balance between these bids and offers and watching how that goes. Because if we're in an uptrend, what you're going to see is it's going to tick up, that bid firms up very quickly, those offers pull, they tick up again, and they'll just keep doing that over and over and over and over again, right? As opposed to bids, it's not a very strong bid, it goes offer, it's not a very strong offer, bids, it's not a very strong bid, and it's just kind of wishy-washy about that, right? That's more random, right? So you can kind of think of this, whether it's which side is stronger is almost like price movement, right? Is like, if this one gets weaker, it's kind of like price moving up a little bit, except for that it's not enough to move price, if that makes sense. Oh, you're German? Okay. No, you've been pretty good so far. Oh, I actually have a lot of German viewers. I think mostly because of the time zone. There's not very many Americans awake at this time. I sometimes wonder if I was doing live streaming in the afternoon, how big the stream would be, but we'd be doing something different, so wouldn't really be comparable, would it? Well, the treasuries are bouncing, but I would say this is a pretty good bounce, isn't it? So they did get stuck there in that area. They were talking about that 19 for a little while, but it looks like they have now pushed through that. So here in the treasury, if we were to trade up 21, 21 half, 22, and like the whole time it was only like 100 contracts traded. Actually, let's clear this stuff above us too, so we can see it a little bit better, right? Then I'm thinking, okay, probably the reason it's moving up is probably the 6J. 6J is the most correlated thing to the treasury, right? So if it's moving like that, probably it's the 6J, right? This is why I say that ES is hard to trade, man. Right? Because there's so many different things that it could be in the S&P 500. It could be movement among the constituent stocks, especially Apple. Like if Apple moves up, then then the futures are probably going to follow it, regardless of what the actual order flow is in the futures, right? If it's happening in options, the same sort of a thing. If it's happening in the other indexes, right? There could be tech stocks are moving overall, and so you don't see as much interest in them trading the ES, but more in the NQ. But they both move, right? Because the whole thing is you want to say, what are the flows? What's driving that flow, right? Correlated instrument is something that very much moves those flows. But it's not so much the market orders flows, it's the limit orders canceling flows, right? Where those bids and offers are kind of reshuffling to take advantage of that spread. Is this the only sign? Well, no. I mean, ultimately, the thing that matters the most is how much actually trades and how much it takes each time that it ticks to trade it, right? But that difference between bid and offer is one of the things that's always there for you to look at, right? And you just kind of keep the context of it, right? Right now we're 19 half 20, right? But the reality is, if you come back and you look at a chart over here, I can zoom this out a little bit. 19 half 20, you're going to see that we're really trading between this 19 half 20 and 19. So it'll like 19 half will go bid, 19 half will go offer, 19 half will go bid. Right? Do you ever think of coaching people? Well, so number one, I always have my private messages open. So if people ask me questions in Discord, just ask the question in the first message. Because if people just say hi, I usually ignore that. But you can ask me questions anytime. I kind of think of the stream here as kind of coaching people. I mean, I'm willing to get on camera and talk to people live off stream if that's what they want, but I think that what you would really get from coaching, you mostly get from watching the stream together, talking about it, right? Because you got to think about, how do we learn? What's going on in our minds, right? Because your brain is a neural network. And so it's watching all of this stuff and it's trying to come up with patterns and it's trying to understand what it's seeing. One of the things that can really screw up your learning is if you have an assumption about the way that the market works, it's incorrect. And so you're making all of these conclusions based on incorrect information, right? But that's why we're all here together to talk about these and share the information that we have so that you get as little of that as possible and you're only getting correct information and you're learning that correct. And as you watch it and you come in and say, okay, we had this move and we had this move and these are the flows that we think were driving those moves, then you learn as you go, right? It's one of those things that I can't just like, I mean, I do have, if you go to speculatorseth.com/strategy.html, I have a document that goes into a lot of detail about what we're doing here, right? But you can't just read that and be a good trader. Like, you have to come in and watch the flows for months before you really even begin to understand what you're looking at. Because that's just the way that your brain works, you know? You've got to think of it as like similar to a physical skill, you know? Yeah, you can connect. So if you look in the video description, I have the Discord link, and then you'll see me on the server. I'm the admin on the server. So you just see Speculator Seth. And my full permanent name is just Speculator Seth too. So you ever get messaged by somebody, because there's lots of spammers out there that try to impersonate server admins, but you'll know which one is me because I'm just Speculator Seth. There's no numbers after the name or anything like that. I'll also never message you, right? I always let the viewer message first. Yeah, you've got to get screen time. Sure. Yeah. Because the thing that you're probably experiencing right now is, I told you very briefly, most of the things that you're going to see and are looking at here for the treasuries, right? But it will feel like, well, I don't know if that really helps me, right? Well, that's because your nerve cells, you know, you've got to get to the point where you have these nerve cells and they say, I see this, and then this triggers all these other things, and you start doing all this analysis and it percolates and it says, oh, okay. You know, here today, I was expecting selling. We've come back quite a bit, although not on a ton of volume. At least not in the 10-year. Maybe it is in the 5. So that means we're getting a steepener. I think that the primary driver behind this flow has been yield curve steepening trades. So what's my takeaway from that? So let's provide a little bit of context here again. So, hold on. So there's kind of a couple of different views in the market right now. So one of the views that you saw last week is that inflation continues to be persistent. Central banks think that they need to continue to raise interest rates, and that there's a greater chance that they have to continue raising interest rates than maybe they anticipated. And so we saw the Treasuries come back up to 4% yield on the 10-year. Okay. Now, there is another view, which is a minority view, but this alternative view is this. The effects of central banking policy are lagged. And most people think that the market factored in the changes very quickly. Like if you go and you look at financial conditions, like how tight is monetary policy and everything, the market like front ran most of the Fed's tightening, and then it's just kind of been flat ever since. So people have said, oh, they actually, maybe the lag of policy effects is not as much in the modern era. Okay. The minority view is that's not true, and that we're going to see those lagged effects to policy in the second half of this year. So if that happens, then what you're going to see is the equities and so forth are going to struggle because of tightening financial conditions, essentially. And that will lead to a recession, and that will lead to interest rates having to come back down. And so in that situation, buying the treasuries would be advantageous, right? So there's this counter trade. Now, if you're going to get that counter trade, when those interest rates start coming back down, that's when you tend to see the yield curve steepen back out, right? That's when those short-term interest rates come down and the curve gets steeper. Hence, today you see curve steeper, treasuries up. That's one theory at least as to what the reasoning or the motivation behind the flows that are coming in here and buying today. Is they're thinking these are bargain prices, and I still think that we're going to have the recession in the second half of the year, right? And the guys that were selling are probably more about the Federal Reserve speakers are going to come in at 8 o'clock and are going to be hawkish and so forth, right? So the thing that we watch for now is, well, one, I could look for a spot to go short if I still believe in that, because maybe they come out and they speak and the market moves off of it, right? But it also kind of makes you wonder if they're actually going to move when the Federal Reserve speakers talk. Doesn't it? What's your opinion to heat map? So heat map looks like good software. I haven't used it a whole lot. I don't think its DOM is as good as Jigsaw, and I'm primarily focused on the DOM. So there's those charts are cool and all, but I don't think that they're as effective as the DOM. There are things that you can see on the DOM that you can't see in those charts, in the book map charts, the heat map charts. The yield curve hasn't moved too much, but it does look like maybe some slight steepening flows. Captain Price says they don't waste time on Discord. Seems there will be a... Well, so if we're talking equities, the S&P 500 is going to open up in 8 minutes, right? And so when that happens, you are going to see an increase in volatility over there, right? For the treasuries, the timing is a little bit off. Because they reversed... They've been kind of reversing for the last 45 minutes, just kind of slowly but surely rising. Did I ban Captain Price once from Discord? I don't know. Captain, I'm always a little suspicious of him because he's like in all of the trading YouTube's channels, including the people that I despise. So, he's everywhere. I think that he just enjoys, you know, especially if there's drama, but I'm not really sure. Love to connect. I don't look at settings. So if you're using Jigsaw, I have a video on my channel here where I go into my workspace and all of the settings that I have. Should they really report about that? Disgraced sports doctor Larry Nassar, who was convicted of sexually abusing female gymnasts, was stabbed multiple times during an altercation with another inmate at a federal prison in Florida. Technically, it's impossible. Yeah. What do you use? So I'm using Rhythmic for my data feed. The thing I like about Rhythmic is it has this plugin mode, so any C# application can like share the data. So that's how I'm able to get the data into Rhythmic Trader Pro, and then it gets forwarded to both NinjaTrader and Jigsaw. That's how I'm able to do that. Does get rid of most of the trolling. Well, I've had to work really. I feel like I've had to work really hard on the Discord. Maybe I'm just not that great at dealing with the spam on the Discord. I think we've done a good job of like setting a culture, right? Like, don't get very often these people coming in hawking BS and everybody else falling for it. And you know, like when people start saying dumb things in Discord, there's almost immediately somebody challenging them, right? Like if you start making claims about setups and stuff, people will ask you for empirical evidence to back it up. But there's just so much spam. So I dealt with for a long time people coming in and trying to pretend to be me. I don't think that anybody falls for it because nobody's ever told me like this is where they're trying to send you or what anything like that. But I made some scripts that is every time that people change their names, you know, this script will test, and it uses fuzzy logic so that, you know, if they try and use my name but like use a replacement character or something like that, it still catches it. And once I started doing that, that cut down on the spam considerably. And then I also had to add some stuff so that looking for keywords and phrases so that when people try and say to message them, it leads those. Because those spammers almost always start with, because you can't post links now, so they almost always start with, oh, I'll teach you, just message me. And then it's immediately like, oh, they're asking somebody to message them, then it bans them. Now we don't get nearly as much of that stuff. I mean, it's still an everyday sort of a thing, but it's maybe like 2 or 3 times a day instead of like 30 times a day. Yep, the new name. I think that the new name thing is probably the primary driver behind them doing that. I think that the impersonation issue was probably the primary driver behind them allowing you to pick out a name. It was really funny to me. It's so many of the people on Reddit and the gaming community are pushing this, and I'm like, you guys don't know what's going on. Y'all being foolish. Like Linus text that was talking about it and everything. Like, this was one of the greatest things about Discord was that you could use any name. You didn't have to worry about it, right? Well, guess what? You can still use that name. You can still use whatever display name you want on the server. It's just that the Discord name behind it, only one person can have that name. And yeah, it is cutting down on spam. You say that your ZN bids and asks are usually 1 to 200 contracts more or less than mine? You're talking about, like, if you looked at 20 half, that there's only 2,800 instead of, 2,200 instead of 2,400? Because if it's a couple of prices out and it's consistently like that, then there's definitely something wrong. Now, if it's more on the inside, it might just be, there's like a 5-second lag, so. Yeah, I muted myself for a bit. I really need to get a button or something for that. I have to look at that. Okay, so square root law. You have a large meta order and you trade 10,000 contracts and it moves up like 4 ticks, right? Then you'd think that if you traded 20,000 contracts that it would move up 8 ticks, right? But it doesn't. It actually does like 6 ticks because it follows the square root law, okay? So that's the meta order. And then this is the decay. Like after the meta order is done, the market will settle back a little bit. And then, you know, that tends to be about 2.5 times the duration, the time of the original meta order, which tends to be 45 minutes, right? So now, if you want to move again, if they're going to do another leg, then you do this. And this one will be not as long, not as far as the first leg, right? That's how it tends to go. Okay, but there is this point. At the beginning of a meta order where if I come in and sell it, I will have a stronger impact. So if I'm trying to do some sort of a speculative trade and I want the market to move, it makes sense for me to start moving the market as soon as that kind of like settling comes in. So when I see a move like we've had this morning, where we have like some sort of a V-shaped recovery or a reversal, that says to me, okay, there is somebody else came in and is trying to push things the other way. And if their order is as big as the original order that pushes down here, then most likely we will end up, this leg will be longer. And you're already kind of seeing that. Like this one went from here to here, right? We're already like 1 or 2 ticks higher than that. Okay. But here's the thing. Maybe these sellers aren't done. Maybe these sellers come in and hit back. So we have to be really cognizant when you're getting a strong trend like that and everything, knowing the situations where somebody wanting to counter trade would be likely to want to step in. And it's kind of in this area. So we got to be careful, right? That's something in this situation that I think we should be particularly cognizant of. Because I still think you sell ahead of the Federal Reserve speakers, right? And that's still another 25 minutes away. Okay, now, so for ES, there's something else we got to talk about. Something that you will see sometimes, and ES is really, really good at this, is when there is like volume hitting the bid, it looks like large amounts. Like right now, you can see there's like a 5K iceberg at 4440. At such a round number, you're always going to see a lot of volume trade there. Okay. But and then when we tick up, you know, you'll see like the amount that there was on there when it ticked up is less, right? Like 36 last time. Okay. And so you think, oh, there's way more market sell orders than there are market buy orders, right? But if you come back over here to this chart and we look at the cumulative delta says that net overall since the open, market buys have been higher by about 5,000. It's coming back down now though, right? So it came up, they're selling that, but they're running into the iceberg, right? So this is where having a chart of cumulative delta up is really useful, because sometimes, especially in ES, the tape can be kind of tricky, and they're really good at making it seem like there's more market sells when there's actually more market buys, because the market buys are spread out more. Does that make sense? Or rather, you understand why I'm saying that? Because that might be why you're saying that it seems like more sell markets and the market is going up. Well, according to our cumulative delta, that's not true. So something we can use to check ourselves. So I got this watch the other day, and it's like kind of sticking to my skin because it's, was a little humid this morning, I guess. You talking about like these tapes right here? So I have these up. One of the things you can do in Jigsaw is there's a setting in here. I can pull the setting up sometimes when you click the settings in Jigsaw. It takes a little bit. Display duration 10, right? I find that really useful. That can give you a really good kind of idea of what the pace is, especially when things start getting going. But I think that the true these tapes where you can filter it to only show market orders over a certain size, I find those really useful. Note that at 15, between 14.5 and 15.5, which was way back there was lots of sells. And then since that time, there haven't really been a whole lot of big orders. Whoever bought this up is sneaky. No, I pulled it over right here. I use this. If this is what you mean by a tape, yes, I have those. They're hidden on the screen behind my face. Right. I have like show you basic. There we go. So you can see what's behind my face. I also usually have the DOM controls up over here too. But so far I haven't felt compelled to take a trade. Summary of markets? I'm not sure what you're referring to. And then there's cumulative delta, but I have cumulative delta on my NinjaTrader charts. Oh, the summary tape? Yeah, maybe you're talking about that one. Yeah, I don't use the summary tape. So the summary tape is essentially, it will give you a summary every time it ticks. I probably could honestly trade from the summary tape. It would take some practice, but what I'm essentially doing from watching the DOM over here is similar to what the summary tape does. I want to see it ticks up or it ticks down. How many contracts did it take to trade that? Steve Cohen said he used the tape a lot, but cannot read it anymore as it is too fast. No wonder. Rather use insider trader info. I'm telling you. So let's be very specific with terms here, right? Because we don't want to trade on insider information. Okay, you don't trade on non-public information, but the market is all about informational asymmetry. There can be things that you know that other market participants don't, and a big part of the game is knowing as much as you can so that you can be the informed trader as much as possible, right? Because there could be public information that tells us, oh yeah, we're likely to move up, and then the people that don't know that public information won't understand why it's moving the way that it is, right? And there's so much informational inefficiency in the markets. You know, that there's just, you know, there's so much edge available there that it's hard for us to decipher it from, you know, noise. The challenge is there's too much. If the markets were actually efficient as people claim that they were, then inefficiencies would stick out like a sore thumb, right? But the reality is that the markets are so inefficient that these huge inefficiencies can be just sitting there and nobody realizes it. Name of that? No, not sure what you're talking about there. I mean, the thing that's funny is that there's so people get on like the congressional trading, right? That people in Congress have made trades, and they sit on committees and stuff. So they're using the information that they get from being on committees and placing trades. And everybody says, well, that's trading on insider information. No, it's not. Everything that they're trading off of is considered public information, and feasibly, you could have access to that information as well. It's just that you don't, right? I would say it's not immoral for them to trade because they're trading on inside information, but I would say it's immoral for them to trade because it's a conflict of interest. So I think that people in public service shouldn't be allowed to trade individual stocks at all, that they should only be allowed to invest in pooled investments like index funds and so forth, right? Right? Yeah, you'd have to watch a lot of C-SPAN. Exactly. But presumably it is public information, right? So there's all sorts of other things out there that are actually similar, right? For instance, there is economic data stuff that you can buy and so forth and do analysis on. Like there's these guys, you ever heard these stories about like hedge funds will use satellite imagery to count how many cars there are in the parking lots of certain stores to determine if those stores are going to outperform or not, right? Like I don't have access to that information. Is that inside information? Well, it's not. Anybody can put a satellite up there and look. It's just you don't have a satellite, right? The market is built around informational inefficiencies. They're everywhere. Okay, so we are possibly pivoting. It is kind of hinting that it could turn back down. The most likely scenario that I see, again, is that this is just a post-meta order impact, and so the buyers are done, and we're just going to kind of go sideways here. Do you know of a website that provides real-time price quotes without delay? Well, so if you're looking at the futures, then almost anywhere that you get online for free is going to be delayed by 10 minutes. And that is because the CME charges a fee, and they say that like all of the data providers have to charge this fee. Okay, so you're never going to find that data for free. But if you're just looking for the S&P 500, for instance, you could just go on TradingView and pull up a chart of the S&P 500, the index itself, and it would give you a live quote. I'm kind of tempted. I feel like, oh, you might as well try and do something here, but I don't think that it's correct. to get involved here. With the way that it went, I think that I could probably wait for Fed speaker to come along and actually say something. Is it still delayed? I don't know, man. You get what you pay for, I guess. I guess what I should really ask is, what is it that you're actually trying to do? Right? What do you want that data for? Because I'm kind of going like, well, what would you be trying to do that wouldn't give you the data? You know, you have a broker or whatever, they're going to give you the data. Not on option. Well, yeah, if you want data on options, that data is going to be delayed too. Yeah. Unless you have a live account and you're watching the live account. Now, if you're trading ES futures and you want to look at some of the options stuff, you might want to look into one of these services like Spot Gamma or so forth. Those tend to be around $100 a month. But those give you really good insights into what's going on in the options flows. So sure enough, it looked like it was turning down and they're already back up on punching the highs a little bit. This looks like more like market making shenanigans more than a large meta order. Wasn't a lot of volume or anything behind it. There wasn't a lot of market orders behind it, let's say. What is the orange color? So the orange color is the VWAP. Orange color is VWAP and pink is the point of control. I have to say, this bull trend that we've had here in the Treasuries is a lot stronger and more persistent than I thought it would be. I thought that maybe, I was hoping that maybe there would be a second leg of selling, and that is not what happened. I always thought the orange was the second point of controllers. No. Nope, it's the VWAP. VWAP is an interesting price, but I don't pay too much attention to it anymore, to be honest with you. I used to base my entire trading around it, but see, once you get into the mode of what flows are going to be in there, what do I know that might say a flow is going to come in here, and then when I see the predicted flow, I take it at wherever it is. Then all of these things about point of controls and VWAPs and all this nonsense is just, you lose interest in it, right? So you're going to have so much success with, oh yeah, I predicted this flow was going to happen, and it went at exactly the way it came in at the time that I thought it was going to. It was the amount and velocity that I thought it was going to, right? There's so much to confirm to you that you did it correctly, that all of this other technical analysis stuff where you're like, well, like I made money, but maybe I was just lucky, sort of a thing, you lose interest in that stuff. Because what the feedback that you get from the informed trading is so strong. Rishi Sunak gave Joe Biden a special mug. So like the press is trying to ask Biden and Rishi all these questions, and they're like, no, we're not going to answer any questions. And then the aide comes in and is like, look, we have a special mug for you. That's funny. Okay, so in 5 minutes, we're going to get Barr and Bailey, Bank of England Governor Bailey will also be speaking. Oh, and we got wholesale inventories too. So the conference that Barr is going to be speaking at is about like bank supervision and so forth. So I'm not too confident that he's going to say too much about interest rate policy per se. It's a possibility, but it's not nearly as strong of a possibility based on what I just heard about what the conference is about. But we also have Messer and Daly speaking in an hour from now. So we'll see where it goes, right? Kind of interesting flows for the first 30 minutes of the S&P. And the dollar here kind of doing a little turn and dive lower. It looks like that move in the dollar down correlates pretty strongly with this buying that we're seeing in the treasuries. And since the dollar is at the moment headed to a new low, you're seeing that buying renewing in the treasury. Hmm. I'm just reading a couple of stories here, but it doesn't look like anything too important. And just some politics stuff. Jemmy Oreo did a poll this morning. If the GOP primary were today, and these were the only options, who gets your vote? Trump, DeSantis, Haley, Pence. And DeSantis is winning with 50.2% out of 269 votes. So that's interesting. I think that Jim's audience is probably pretty biased, though. I would expect them to be a little bit more likely to be pro DeSantis. Have you noticed, by the way, how hard the media has been working this past week to say that, like, the DeSantis campaign is not doing very well and so forth? I would ignore stories like that before Labor Day. The media is desperate for Donald Trump to be the Republican nominee again. They're just desperate. Nothing would make them happier. Because then they make money from all of the media drama, right? And Donald Trump is not very likely to beat Joe Biden if he ran again. So that's the only way that Joe Biden can win, is if Donald Trump is the nominee, right? You don't think DeSantis would beat him? Well, I don't think that the latest polling shows any of them above him, does it? Wonder, does Real Clear Politics track that? The decline in DeSantis from 30 to 20%, it is a real thing over the past 6 months or so. Let's see here. National. What can I go? National? Swear there is one. I guess maybe it doesn't. I've seen a few polls on that. I think I did see one where Donald Trump lost and DeSantis won, and another one where Joe Biden was beating all of the Republicans. But I'm not too confident in those numbers really being very accurate right now. You know, I think those ones are kind of ignorable. So, like, what is my evidence that Donald Trump would lose to Joe Biden? I mean, there's those polls, but I guess I can't really use those polls. So I guess I'm kind of relying more on my own judgment there to say that. But I think the argument right now is kind of, well, Donald Trump will surely lose, so you might as well try somebody else. You don't believe him. That's so funny. Because the Donald Trump campaign is trying to portray DeSantis as a radical extremist. I mean, it was like the thing that's so funny about it is that you're totally right. Like DeSantis is really an establishment Republican with the messaging, the outward messaging of the far right. Right? He spends a lot of time fighting against wokeness or whatever the issue is that the Republican base is concerned about at that time. But when you look at his policies, like his bigger policies outside of like the Don't Say Gay bill or whatever they called it, right? They're pretty standard Republican. Now they've been effective. He's done a good job. Okay, but they're not like extreme. They're not far right positions. They're really not. Put him on the national stage, and without that friendly Florida legislature, he's worthless and would just toe the GOP line. I don't know if that's true. Because number one, I think that he is the kind of guy that will come out and try and set the stage, the narrative, use the bully pulpit. I think he's pretty good at that, it seems. But would he actually get any serious laws passed? Probably not. But I don't think that any Republican will. I'm not sure it's really possible in the current situation for the Republicans to get much serious legislation done. The best we can do is just not have a Democrat in office so that we get all this crazy stuff that Joe Biden is doing with the executive pen. Well, there's a lot. I guess there's a lot of things that DeSantis could do with presidential orders or whatever. That's coming. So I thought I was going to put it out today. And as I was doing the video, I wanted to check a couple of other things. I wanted to back test it a bunch of different ways. So I figured I'd wait another week. So I probably got an hour, 2 hours worth of editing still left to do, and then a bunch of back testing. But I would like you to test it if you could. So there's an indicator, a strategy, and then there's a data set that the indicator needs as well. So and when I tried it, I had found that I had made a little goof up, and I was like, oh, okay, I need to fix this. So it'd be nice to have somebody else to try, because what I don't want to have happen is a bunch of people, when the video comes out and a bunch of people try doing it themselves and they all have problems, or they can't do it, or the strategy doesn't work the way that they expect, or something like that. Because that was kind of the thing that came to me, was the setup is if you're above the prior day's value area high, etc., etc. And then there's momentum that you trade back down to the point of control, right? Well, I'm not explicitly testing. It doesn't have to cross that line in order for it to take the trade. It just has to be above that line and having the momentum coming down. And I did that because when I was testing it over the 2 years of data, that worked better. You got more trades, and the trades got more profitability off of them. So what actually does happen if you wait for it to cross that line over the 10-year period? And I was like, oh, I should go back and test that, because that's probably more like what people are expecting. to see in the code. So that's why I kind of wanted to wait. Well, they did take a little skip higher there after the news release and everything. But it's kind of been slowed there as well. So the data that you get is previous day's point of control value, area high, value, area low. So theoretically useless data, but people want it. So, we're put it out there to show people that it doesn't really matter. No more Republican. Nah, I think that Joe Biden has been really damaging. Like, seriously. It's a little disheartening to see how much impact on the national conversation the president has. And I really don't think we would be having the same conversation that we are about things like wokeness and so forth if Donald Trump was president right now. I mean, maybe it's similar, but it wouldn't be the same thing. The administration has pushed it really hard. He's basically, and it's not even necessarily Joe Biden, but he's taken the most radical people to fill his cabinet and let them just run with it. And it hasn't been good. Then on top of that, his economic policy was just terrible. One of the things that I'm finding really, really frustrating right now is that they're pushing it Bidenomics like it's a good thing, and I'm seeing people, even creators and stuff that are usually pretty smart, like totally falling for it and being like, well, but look that the economy actually has done pretty well over the past 2 years and whatever. I'm just like, no. Because real wages over the past 2 years has fallen. Okay, so everything that you just said is irrelevant because real wages fell. So they're leaving behind a lot of liquidity on the offers there now. That's curious. So it's only at 3 prices, and it's only been for the last few minutes. So we shouldn't read too much into that. But when I start to see a change like that in the limit orders, that could indicate the presence of large players executing a meta order. It looks like there's plenty of room for them plenty of time left, I guess, them to try and do something. New York Times to close sports desk. Okay, didn't know they had one. Joseph Wing says slowing employment growth historically meant slowing aggregate demand. But demographic shifts also open up the possibility that it can mean running out of workers. The post sketches out that potential amidst overall labor supply and demand factors. Yes. Well, and I would also say that demographic shifts can impact aggregate demand. And I think that the demographic shifts are shifting towards, at least in the near future, higher aggregate demand. This is why I harp on I tell you what, one of the issues that seems to get me the most right now is the student debt forgiveness thing. I mean, on one hand, I think that it's very damaging to break the social contract like that. For people to come in and say, okay, I'm going to take on this debt, I'm going to pay it, and then you vote that you don't have to, right? That's a real problem, because now everybody goes, oh, I should just vote to have my debts forgiven. Why don't we all just vote that all house debt is forgiven? You don't have to pay your mortgage anymore. Why not? Mortgages are predatory. I can use almost all the same arguments, okay? But there's a bigger thing at play here, because when people argue in favor of student loan debt forgiveness, they're always arguing from like okay, well, these people can't afford to pay it, these loans are predatory, the school system is broken, and so there's kind of this moral argument that like it's not fair, right? It would be beneficial to us, it would be beneficial to the economy, etc., 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 right? Okay. That is the wrong kind of argument to make when it comes down to a thing related to economics. What we should really be asking is, what is effective policy? What are the positives and negatives of enacting this policy? And what drives me crazy is that the pro-student debt forgiveness people cannot see or even imagine that there are negative impacts from forgiving the student loans. And one of the impacts that we've had is that because we've had forbearance and they haven't had to pay the loans for the last like 3 years, all of that money is going into demand, and it has led to inflation. It's not the only thing that's contributing to inflation. In fact, I think when Goldman Sachs did this, they said that it was like 1% a quarter or something like that. Okay. Or maybe it was 1% a year, but that's not trivial. That is not trivial. That is what you're doing, is you're taking the largest, most spendy group, right? The millennials and Gen Z, the people that are likely to be, using their money the most and giving them the money. Yeah, that impacts demand. That impacts demand big time. And it's probably more so than these estimates say, right? You can't give the largest demographic group in America more money and not expect it to influence demand, right? And so the end result here is that you lose so much on inflation that it cancels out whatever you made from not having to pay the loan. In most cases, it's not worth it. It's just not worth it. The negative impacts are not worth it. They don't even say it. Or whenever we say this, they're like, no, it doesn't. It doesn't create inflation. Well, you're a fucking idiot then, because you don't know what you're talking about. Like, when you take out a loan, it creates money. So if you don't have to pay that money back, then that money just continues to float out in the economy. That's going to mean that either you're going to get the inflation, or that the Federal Reserve is going to have to tighten monetary supply even more so because of that stuff out there. And then that's going to impact banks, and you're going to have more likely to have these blowups and that sort of thing. These things have consequences. No one forced them to get their loans. It was their choice. They could choose a different school, could have applied scholarships, could have worked throughout college. Well, yeah. One of the things that I think is really bizarre about this whole thing is the number of people that aren't actually like paying it all out. like, you don't have to pay the whole loan. Like, there's a certain amount that you're supposed to pay, but then you can say, well, I'm not making enough to be able to pay that, so you pay less. And then after yay many years, you'll look back at it and you realize that you've only paid the interest, and it hasn't, like, the loan hasn't decreased at all. Well, this is just like a house. But so then people say that they're predatory, and it's like, well, no, you just need to pay what you're actually supposed to pay is the first thing. But I'm kind of wondering if maybe a lot of these kids just don't know that stuff about loans, you know? Because anybody with a home loan knows that that's how it goes, right? That you stay in, like, most people only stay in a house for like 6 to 8 years, and by that time they've hardly built any equity into it yet. So they're still, their payments are mostly going towards interest. And the kids say that it's predatory and stuff, but, like, man, I mean, these are like government loans. Yes, the federal government created a loan program that basically forced everybody to go and get loans so that then they would have political power over you. Yep, and y'all fell for it. We all said that's exactly what's going to happen when Obama changed things. Nobody listens. Now we're supposed to give people free money because they're not paying attention. A lot of them are going to school for something that doesn't have jobs available. So whenever I make that argument, these people say, well, everybody's having difficulty getting jobs. And I'm like, no, that's not true. Because number one, they're definitely not having trouble getting jobs in my industry. Okay, I still get messages daily from people on LinkedIn trying to headhunt and stuff, right? Okay. If you went into anesthesiology, I guarantee you're not having a hard time finding a job, right? What percentage of these degrees are actually useless versus not? I don't know. But the answer is still, like, you should be doing the math and saying, what do I expect to make? What job am I looking to get into, and what do I expect to make? And what do I expect to pay? And is the student loan actually worth it for the income that I'm going to get out? You know, and basically look at lifetime earnings. And yeah, there are a lot of jobs, places that you could go to school where it just doesn't make sense. And then people are like, well, we can't have everybody working in trades. And it's like, well, yeah, you can't have everybody working in trades, but probably we need more people working in trades than there are right now. Right? Your housing is not going to get better if there aren't people there to do plumbing and electrical and yada, 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 right? Hey, you can make good money doing electrical. Make good money doing electrical. Although, like, from my perspective, I know I'm afraid that one of my kids wants to do acting. You get into university level stuff and you want to go into acting. I'm not going to pay for that. That doesn't pay back, right? You're going to a university, you're going to be doing business, engineering, doctor, lawyer, right? It doesn't fit in that category. Maybe economics. Maybe economics. Although I tell you what, I've met a lot of economics majors that do not use their major in their job. I wonder if that's one of those ones where you really need a master's degree in economics, probably, to really go very much in the industry with a job from that. But it just kind of comes back to, like, everybody's trying to argue whether it's fair or not. Right? I don't think that's the right approach. Like, what we really should be discussing is the positives and negatives of the actual policy. Because I don't think that the aggregate impact on the country is a positive thing. Everything else, those are pretty much the only degrees worth getting. Everything else you can learn on the job, and most businesses prefer it so they can teach you their method. Yeah, well, like everything beyond that. What are the schools outside of that? Art degree, psychology, humanities. I math goes in with engineering. Let's see here. Colleges. What are the different colleges? Architecture. I guess you could do architecture. Dentistry, like we could fit that under doctor. There's a cultural and social transformation degree. Yeah, no, that humanities. Education. Okay, now education is the messed up one, right? Education is the one where, like, you really have to, if certain jobs, you really have to get into education, but then they pay absolute crap. Fine arts, health, honors college, humanities, law, medicine, mines, that's engineering, nursing, pharmacy, that's doctor, science, behavior, social circuit, yeah. I think we're good. Yeah, I think I just about covered it. So it's really all of the people in psychology, fine arts, and humanities. Because all of those other jobs, I think, are actually, you should actually be able to do pretty well. Now, it may also depend on where you live. I think that one of the other problems is you get one of these degrees and then you want to live in New York, right? It shouldn't be like that, but the way the statistics work and everything, probably a lot of the people online complaining about that sort of thing, a lot of it has to do with where they live. What is ergonomy? I'm really surprised. I'm told that there are some people that get into computer science and then they can't hack it and they drop out or whatever, which I can't really picture. I didn't have a problem. It was hard work, but I never had a problem understanding the concepts. Because otherwise, I just don't understand why everybody doesn't go into coding. I know. And then there's all these people that are like, all of these white-collar jobs are going to disappear because of ChatGPT. No. Wrong. Okay, generalized intelligence isn't coming. Okay. We're so many light years. We're light years away from that. Okay. GPT is a fun novelty. It'll get better. I don't think it really replaces most of those jobs. It might make those jobs a little bit more efficient, but I don't think it replaces most of them. I don't know. I guess the thing is everybody expects to do better than average, which is not realistic. Offers are strong here. Well, those big offers that we saw it's not quite as exaggerated as it was, but there's still like the big ones up there above us. But just immediately above us, like 29.5, it looks pretty normal. it looks kind of like, there was a little bit of a spike higher, but they settled back into the range around 29 again. So we might see a move after 9 because, again, we do have speakers at the top of the hour. And there's the European close. Tends to be some movement into that. But yeah, I don't see a trade for me. The trade would have been to reverse here. There's no way that I was looking for a reversal, man. In fact, through most of that uptrend up until about 20, I was like 25 actually is where it got to. I was looking for the reversal, and then when it settled at 25, I was like, oh, well, okay, I guess we're not doing that one because that was way too far. So, I don't know. I think it has been, even though it's been slower, it does look like a inverse sine law kind of setup, right? You have a meta order, it's like this, right? And then somebody hits back, it's going to go further. So you can see that the delta in the end was, right? Blah, 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 blah. So are my drawings helping? Maybe my drawings aren't helping you here, right? The meta orders were the same size, but the second meta order pushed it further, right? Because the liquidity all the way through here was damaged. And there wasn't a pause, right? If it had done this, right, and then it decided to go up, right, maybe it would have only gotten to here. Maybe it would have only gotten to here, right? But because it hit back immediately, it had stronger impact. Didn't take, very much orders at all to make it happen. We still got 30 minutes. Probably shut things down a little earlier. Like sometimes they'll go right to the top of the hour, but we'll probably cut it off 5 minutes before. Okay, here's an interesting thought from one Ben Shapiro. The fascinating thing about all the Trump-Biden polls is the number of people who say they won't vote or still don't know, which is reminiscent of 2016, not 2020. That is serious trouble for Biden. He can't win if people stay home in the swing states. Ironically, Biden's softness is creating Trump's momentum because the electability argument is no longer an argument against him being Biden, I think, right? If the election is a referendum on Biden's performance, he's toast. Oh, no, I think against him is Trump. Biden's softness is creating Trump's momentum because the electability argument is no longer an argument against Trump. If Biden is so terrible that Trump will beat him, that might be the case. Because probably is true. The reason I find that interesting is because, right, the argument that I was making in favor of DeSantis was, well, Trump can't beat him, so maybe DeSantis can, right? But if Trump can beat him, then that argument is moot, isn't it? And then people would rather have Trump. I actually think I would rather have DeSantis than Trump. But that's just because, so the problem that I have with Trump right now is that I feel like after he lost the election, well, I would even say well before that, it was like his team was abandoning him. Like a politician, you can't think of politicians as people, right? Politicians are groups of people with special interests backing them, right? So you should pay a lot of attention to who decides to endorse him, Who decides to donate money to this candidate? Who do they hire as their, their campaign managers and things like that? Because those are the people that are going to be on their staff when they get into the White House. And one of the things that was good about Donald Trump was that he wasn't afraid to like fire people and be like, this isn't working, and change it up, right? But what happened towards the end of his term was that didn't work anymore because he couldn't find the people to fill the spots. And like the smart people were like abandoning him in droves. Should I say the smart people? It's not, but the kind of like the workers, right? And so I'm concerned about his ability to create an effective working government if he gets elected again. I think that's the big thing that bothers me about Trump right now, is like he's going to come in, scorched earth, destroy the CIA, destroy the FBI. Okay, cool. Maybe there's some problems there, but like, who are you going to get to run things? You have to hire all of these people for these positions. And you didn't do a very good job of it last time. You kept getting betrayed, and, you get betrayed by the swamp left and right. How are you going to fix that problem? Whereas I feel that DeSantis's campaign team, at least, has been really, really sharp so far. I guess Trump does have an okay campaign team. So I may be underestimating him. But I think that the campaign team behind Trump are just like, he's basically the establishment now. Like, he's the most likely to win, and so that's why they're all going over there. But that doesn't mean that those people will do the right things if Trump wins, right? I'm also a little concerned that Donald Trump is attacking Ron DeSantis from the left, because I don't think that it's just raw meat sort of a thing. Like, I don't think that it's just, you say these things and enact laws because that's what your constituents want, or that's what people are obsessed with. I think that we are dealing with some serious issues that have a significant impact on the future of our society. Like, if there are children that are essentially being chemically castrated when it's not necessary, we have a misunderstanding of the medical mental health behind all of this, right? That's a serious issue. It's even happening to one person. That's a serious issue worthy of our attention, right? That's the future of our country you're talking about right there. It is something worth our time. I disagree with those people who think that it's a distraction. I want to get all of the social issues out of the way because they are important, so that we can focus on the things that will, fixing the economic and policy problems. I don't know if we can really tackle those issues and solve those problems if we have an ineffective culture. USD TRY seen drifting up to 30 during 2024. By the way, it looks like the dollar is still the most dominant force out there in the markets this morning. It's just that normally a weaker dollar would result in equity weakness, and that's not exactly, or sorry, dollar weakness would be equity strength, and that's not what's happening. Oh, that's interesting that's a headline that's coming on my screen. Utah's Spencer Cox hopes a governor can defeat Trump in the primary, someone who can win. Why would anybody outside of Utah care what he thinks? You know, Trump's relationship with Utah has been kind of weird, right? Because I'm concerned that it's going to turn into, oh yeah, screw Utah. Because I don't think there's going to be very many people in Utah that support him this time around. And they voted with him when he was the nominee, but I don't think very many people in Utah will support him as the nominee, or support him in the primary rather. There you go. This person. I used to think that economic issues should take the forefront in political debates. In a perfect world, Republicans could take a more traditional hands-off approach to government intervention into social issues and cultural concerns. However, we don't live in a perfect world. This is Biden's America, and the leftists are determined to reshape our country into one that is unacceptable to at least half of the population. The transgender agenda is promoted in schools and in public events. Parents are told they should not have a say in what is taught in their children's school. Joe Biden parrots the language of communists when he says all children are everyone's children. American parents are pushing back and saying no, their children are not the property of the government. We'll have to see. I got to tell you, it's always surprising when the debates start and everything. What happens? You may see things like the polling and everything shift dramatically after Labor Day. We just have to wait and see what happens. Back to 27, huh? I suppose if I had taken something on the reverse, on this coming back down, I might have been able to make $10 on it. I'm still not seeing anything that really gives me a strong reason to believe that I would catch a really great trade, though. That one would probably be more luck of the draw. And if I take that one, why wouldn't I have taken the earlier ones that would have been losers, right? Well, it's Monday. Let's see here. Something that we haven't done is gone into what else we got going this week. We do get inflation numbers this week, don't we? This week. Yes, Wednesday is CPI, 10-year bond auction. Oh, it's auction week. Ooh. This is when we see those auctions. This is what I'm concerned about. Treasury is really selling. Beige Book Wednesday, PPI Thursday, University of Michigan Consumer Sentiment on Friday. I'm always unsure of what that U of M stands for, but no, yes, it is Michigan. There is a big offer at 28. Oh, it pulled though. It's down at 27. 26.5 goes offer again. Oh, this is from the BBC. Russian President Vladimir Putin met mercenary leader Yevgeny Prigozhin after the failed Wagner Group mutiny last month, the Kremlin says. And that feels like it happened like just last week, but it's already been like 3 or 4 weeks, hasn't it? The president gave an assessment of the company's action on the front. He also gave an assessment to the June 24 events. Putin listened to the commander's explanation and suggested variants of their future employment and their future use in combat. Either Putin is on much shakier ground than we think, or he and Prigozhin have some sort of sane strategy going on. Even if it's the latter, though, that doesn't make it smart. Yeah, I don't know what's going on in Russia, man. That whole situation is just seems really bizarre. That whole situation seems really bizarre. Okay, FedSpar says inflation is way too high. That's the first thing I've heard out of that. And he's been speaking for almost an hour. Oh geez, that story about Gary Nasser being stabbed is on the front page of Zero Hedge now. Right below, the gold standard is back. Okay, so can we talk about this? So apparently BRICS are going to create a gold-backed currency, which would be Brazil, Russia, Iran, Syria, and what's the S? Oh, C is China. China, Syria. So this is like, oh, this will challenge the dollar's hegemony. I wouldn't be so sure about that. Because if it's gold-backed, then probably you just start to see the same problems that caused the United States to go off of the gold standard, right? And guess what? The United States has like the most gold. So if it really became a problem and they needed to do the economic warfare, they have the let's say the war chest to do it with. Seeing a little bit of a breakout here in oil at the moment. Otherwise, let's see here. What are things doing? What are the biggest winners today? Natural gas, soybeans, and small cap stocks with RTY. Biggest losers, wheat, British pound, silver, and NASDAQ. But those are all pretty small losses. So overall, I would say the Treasuries moved a decent amount today, right? But it's like not very much of a change. Other markets have hardly moved at all. Like the S&P 500 has hardly moved at all, right? we're still stuck in the same 10-point range or so. Bart says rates are close to restrictive, but the Fed still has work to do. I'm wondering if they're going to start a distribution at 26.5 or not. It could. It kind of seems like they're just starting to meander randomly, though, yeah? Oh, we have New York Fed inflation expectations. Oh, you're right. That is on my calendar. Well, I don't think I will be here for that. In fact, I'm kind of, well, Bar's still speaking. I think we'll hold out the last 5 minutes, but oh, here's a story about threads. I was like, I'm not really hearing a whole lot about it this morning. It's like the PR push is over already. Any trades today? No. There was definitely enough movement for it, but no, the movement that we had today was very much unexpected. So if I get a move like that and it's not what I was expecting at all, and I didn't take any trades, that's a good thing, right? It's a good thing. But somebody hit back. So this is kind of a warning shot. I think that you might see volatility contract here a little bit this week in the Treasuries. Well, at least until, I think tomorrow might be a little quiet too. Of course, on Wednesday, you got CPI, and then there's always a chance of some movement on CPI. But yeah. But today and tomorrow, because, there was some thinking that, hey, this could just sell and sell and sell. Right. Now, I do think, let's see here, tomorrow, it's not showing it, but let's go to Treasury my calendar doesn't show it, but sometimes there are less, what is the word? What they changed their interface. Okay, so there's 52-week bills. Oh, and 3 years. Yep, 3-year auction tomorrow. 10-year. 30-year. And then tips on the 20th. When's the 20th? Next Thursday. Okay. So one of the things that we're looking at is that there is going to be tightening. So that is to say, like quantitative tightening. The Federal Reserve will not roll over as many of its treasuries. And so that's going to result in weaker demand at the auctions. And so the auction days are one of the places where we should be particularly on the lookout for changes for interest rates to push higher. Now, I don't know if it's going to be a huge issue with the 3-year, but we'll see. Okay, there's my little ding. That's time for me to get going. So, it's another reversal day in Treasuries. I don't know if I want to call it that. That's what I'm going to say. That's a clickbaity title. Treasuries, stop the bleeding for now. We'll see. All right, guys. I thank you for watching. Make sure if you're new, visit my channel. I've got a bunch of links in the video description. There's Discord. I'm always there on Discord. Affiliate links for Jigsaw and my indicator package and the strategy guide that you can get on my website. So check those out. I'll see you tomorrow. In the meantime, stay excellent, team.